Hello traders, my name is Logan with Funding Talent. In today's video, we're doing April 5th's market forecast. In this video, we hope to highlight the best fundamental drivers for you to keep your eye on in this upcoming week and the best technical setups. So, without any further delay, let's get right into the video. So traders, as always, we are going to start with the fundamental drivers of this upcoming week. For our high impact red folder news in this upcoming week, we have a little bit of news starting on Tuesday for the Australian dollar. That is starting at 12:30 a.m. Again, as always, all of these times are listed in Eastern Standard Time. And then on Wednesday, we have some news at 2 p.m. We have the USD news for our FOMC meeting minutes. And then on Thursday, we have some 12 p.m. again, US dollar news when our Fed Chair Powell will begin to speak. And then at 8:30 on Friday, we have some Canadian dollar news with the unemployment change and the unemployment rate. So the main days to keep your eye on are Tuesday, Wednesday, Thursday, and Friday. Mainly Wednesday and Thursday for the United States dollar, and then Canadian dollar on Friday, Australian dollar on Tuesday. The dollar index was a little changed at 92.8 during a thin trading session on Friday, but it remained close to levels not seen since early November and is on course for its third consecutive week of gains as investors continue to bet on a strong economic recovery, which we have been talking about here, amid another fiscal stimulus and coronavirus vaccination. The U.S. economy has added 916,000 jobs in just March of 2021, the most in 7 months. This is fantastic news. This is following an upwardly revised 468,000 added jobs in February, and it compares with the market expectations of 647. So we blew those expectations out of the water amid business restrictions, falling coronavirus infection rates, and a fast vaccine rollout, and continued support from the government. Overall, the dollar has been doing very well due to strong economic recovery, which is great strides in employing more people worldwide and in the U.S. So for our market sentiment this week, we're going to be looking at a risk-on market sentiment, as you could probably guess, because all of the great news that we just spoke about. We've been following this news for the last couple of weeks, and you could see when we switched from the risk-off market environment into the risk-on market environment, things have been working out extremely well according to that sentiment. So, good news everywhere. We continue to show confidence in the risk-on market sentiment. And for our newer viewers, again, all that means is expectations are higher for further economic growth. Investors are more willing to invest their money for higher returns. And this, for our foreign exchange traders, means that the New Zealand dollar, Canadian dollar, Australian dollar, euro, and pound are set to appreciate. So moving into our charts for the week, as you can see here, this was the USD CAD trade that I laid out for you guys last week. And there was a lot of opportunities to make a good, solid trade on this analysis, or multiple trades if you drop to a lower time frame. So we had the breakout of this support line over here, retested that resistance fractal, and then since then came off of that level. This does look like a retracement to me, and then we might head higher. So if you are in this trade, I would recommend either exiting or tightening your stop loss for the possibility of a continued bearish pattern. Moving into USD CHF, I gave out this analysis to you guys a little over 2 weeks ago. Since then, it worked out fantastic. We've hit our take profit for the fifth wave extension, and it seems now we've found our top in the fifth wave, and we're going to form our corrective ABC waves. We're going to see how it plays out in the next couple of days, see if we get that next corrective move down, wait for the other corrective move later, and then play for the C wave, which I will hopefully outline for you guys in the next week's market forecast. And some news. We had our first trade as of last week that actually hit stop loss on this analysis, which is actually kind of, I'm pretty happy about that because we're very realistic with you guys. We know not every trade wins, but we focus on the best, highest probability trading setups. And honestly, you might not have even taken that trade. I didn't take that trade, but I was showing you guys the analysis because it was decent analysis. If you waited for confirmation, you would have never gotten in. But if you blindly followed it, which you should never do because you always should form your own analysis, you probably wouldn't have gotten in. That being said, if you did get in, because there was a possible entry that I noticed, you would have gotten stopped out. I believe that was either GBP CHF or GBP NZD. Since then, we're continuing on with our GBP CAD entry here. As you can see, we finished, and it looks like we are forming a head and shoulders. Seems like we just finished our right shoulder. From here, we can see price to come back up, retest this resistance fractal, resistance line, however you want to categorize it as. You can see it as both. If we get a break and the confirmation of this head and shoulders, then my bias will shift to long on the pound CAD. AUD NZD, I outlined this trade for you guys last week, which worked out phenomenally. If you happen to get in, fantastic work on that. And it seems like we got back down to our retracement level right here, which is about the 38.2 level of our previous impulse wave. So this is fantastically setting up for So this is setting up for a great possible entry long if we get a confirmation of this level and a rejection of it. Moving into AUD NZD, we did have a head and shoulders form on AUD NZD on the daily chart. Since then, we've broken our neckline, came back up, confirmed that our neckline is still holding as resistance, and have since then pushed lower. So if you're looking to get into this trade, I think now is a great time you could possibly get in. Still have a very good risk-reward ratio in terms of this head and shoulders. For take profits on the head and shoulders, you could either measure the length from the head to the neckline, or you can use Fibonacci extensions, of course, as we always do. So our first take profit level for this will be 74.68, and then after that, it will be 72.35. Moving into Euro CHF, this looks like a fantastic corrective wave play that we can see here. It was not the same analysis we had previously, but if you took this trade, you'd still be in it, but the analysis has shifted. Since that last analysis we gave out last week, which actually did work out, I know I made a profitable trade on it, I hope a couple of you guys did as well. We've came up and confirmed the top of our B wave here at the top of this resistance fractal, and since then we've rejected that level and are coming lower. My bias is going to be short on Euro CHF the same way it is on AUD CHF. I know I didn't pull up that analysis for you guys, but I do think that is another pair to be looking short on. But for right now, my eye is going to mainly focus on Euro CHF as it's a higher probability trading setup, and I'll be looking for our final take profit to be down here at the 10962 level, but our first take profit will be here at the 1.1 level. Moving into silver, so if you've been following for a while, we had an entry just above here, and that trade has worked out phenomenally. Since then, you could have added 2 times for a total of 3 positions short, and I do think silver will continue to come lower, but we are retracing right now, which is okay. Healthy trends have retracements, so if we have a little bit of a retracement now, I'm not too worried. This might be another opportunity to add more positions. That being said, make sure you're taking profits off the table, covering your initial position, and moving your stop loss to break even. This allows you to enter in this trade risk-free and just have a better risk-to-reward ratio overall because you're not have anything at risk. Moving into gold. So our amazing buying opportunity, which happened here on the 8th of March, presented again for us. We had another test of the 61.8 retracement and the bottom bound of this channel. So since then, we've bounced strongly off. So if you got another position on there, fantastic work. And my bias will continue to remain long on gold. For anybody that has not seen this analysis yet, we are coming down at the bottom of this channel, retesting our support line in this channel, bouncing off of the 61.8 retracement of our previous impulse wave, and we're looking to head higher. I still think this long idea looks fantastic. Looking into Ethereum, the crypto bull of this last week, we did have our head and shoulders take profit hit. Since then, we have formed a 5-wave impulse move higher. Here's the question. Is this our 3rd wave overall or our 5th wave as I have laid out here? This could be our 3rd wave right here, waiting for a retracement to take us into the 4th and then continue higher. We're going to be looking to see how this corrective wave happens out, but my bias will continue to be long on Ethereum for both fundamental and technical reasons. I think Ethereum is a fantastic buy for anyone looking into Ethereum. I recommend looking into more cryptocurrencies in general and getting more familiar with it, because before you invest in anything, you should know what you are investing in. And crypto is the same as any other asset class, so get familiar with the asset class before you put your hard-earned money into it. Ethereum is a very good opportunity to buy right now, and as well as Bitcoin, I think. Bitcoin has since been trending in this uptrending channel. Will we break out and come back lower to maybe retest this resistance turn support? Absolutely possible. But the potential upside is much greater than the potential downside on Bitcoin as of right now. There might be a larger retracement in cryptocurrencies, as I have been talking about, but as of right now, I do not see the signs of that forming. Once that does form, you will know that I will inform all of you guys on the market forecast. So for our currency basket strength and weakness, we have some indecision on the yen, Kiwi, the Swiss franc, and the Canadian dollar, but it does seem like the US dollar, the Australian dollar, the euro, and the pound are set to appreciate, which does line up for our risk on market sentiment. The Swiss franc is at an interesting spot right now. We've been forming a very strong low, and we have not yet broken out of that. We are still holding that low with a lot of pins, and it's possible that we bounce off of that, absolutely, especially because we are divergent. But it's absolutely possible that we continue with our risk on market sentiment, we break lower on the Swiss franc, and we continue our bearish trend. So traders, that was the market forecast for April 5th and this upcoming week. I hope that I've highlighted the best fundamental drivers for you to stay away from and the best technical setups for you to utilize in your own trading strategy or trade alone. If you are not already following us on all of our social media platforms, be sure to do so because we're releasing new content every single day across all of our different platforms, and we are releasing new videos just like this every single Monday for you guys on YouTube. So, on behalf of everyone at Funding Talent, happy trading.